The stock market has been getting beaten into the ground just like your bank account before Christmas. But believe it or not, the stock market is about to drop faster than my waistline on Thanksgiving. And Thanksgiving is my favorite holiday, so I think that says a lot. Okay, cut it, restart. Welcome back to the channel. My name is Tyler, the Creative Investor, or TCI, whatever you guys want to call me. It's all fine by me. Just like the title of this video says, things are heating up, and that's what we're going to get into here in this video, and we're not going to waste any time getting into it. So if you guys laughed off the intro or you guys find value out of this video, hit the like button for me, subscribe to the channel, ring that notification bell as well. It doesn't ever work anyways, but if you guys want a chance to get notified as soon as videos are posted, potentially make you guys a lot of money, go ahead and do that for me. As well as if you guys want access to all of my trades in real time, link for that down below in the pinned comment. And whoa, AMC is taking a bit of a candle right there, so let's dive straight into it. Apes and Apes markets are down quite substantially today. The Russell 2000 down 1.33%, Nasdaq 0.5%, S&P approaching 1%, and the Dow Jones down 1.18%. So it is a quite substantial down day, and this could develop even more throughout the rest of the day, and ultimately that does help to restrict liquidity. But we do have a lot of news that came out today. This is something that is really flying under the radar that you probably won't hear a lot of people talk about, but that is actually a very big deal. So consumer sentiment dropped in January, according to preliminary data from the University of Michigan, falling to 68.8%, or the lowest level in a decade. Number one, shout out Michigan, but falling to the lowest level in a decade. Exactly what this is consumer sentiment around the state of the economy. What do they think inflation is going to be? Do they think they're going to earn more money? Are they going to work more? Things like that. And the fact that it's dropping so much is not a good sign whatsoever. A lot of people, these are your average everyday people, are citing concerns about inflation and if they're going to make more in 2022 than they did in 2021. So not good right there. And that's sending a huge red flag, as it is at the lowest level in a decade. So you'd have to take us back to what, 2002 to get to, or 2012 to get back to these levels. So right when we were starting to come out of the Great Recession. But even more important than that, if you guys see my last video, just feel free to skip past this part, but it says retail sales dropped 1.9% in December as higher prices caused consumers to curb spending. The forecast was for a 0.1% drop. This came in substantially higher at 1.9%. So this proves everything I've been saying so far to be correct about spending is going to slow down in the second half of 2022. And what you guys might not realize, as well, in high inflation is not good. Stocks do not like that. Stocks do not like a Federal Reserve that is taking money out of the system. They can handle that. And that does not necessarily mean there is going to be a violent sell-off and a liquidity constraint strong enough to cause the MOAS. But what does? When spending is dramatically reduced and once companies no longer can be valued at X times sales till 2025, right? Once those valuation metrics must go down because growth is slowing down, that's when you see big hits that will be taken by the hedge funds, the institutions. That's when you see less money available to service their AMC margin calls on top of their other margin calls that they would be getting. And that's really what all of this boils down to, and I hope it's starting to make some sense to you guys. And if you guys don't know, I work at a restaurant. I'm a real estate agent. I own almost 3 rental properties now. And what I've noticed is about 2 days after Christmas, people just stopped coming in. Like going from a couple $1,000s in sales every day, now down to maybe $1,000 or $1,500 in sales every single day at my restaurant job. So you're seeing the spending dramatically slowing down. At the same time, Citigroup shares slide after fourth quarter profit declines 26%. The company's net income dropped 26% to $3.2 billion. Citigroup cited an increase in expenses for the sharp decline. Citigroup reported an 18% year-over-year rise in operating expenses to $13.5 billion for the quarter. So this should be profit growth or revenue growth, but they're actually reporting an 18% higher operating expense just to run the business in general. So when you add all of this together, not looking so hot for the overall economy. And the second half of 2022, if not just Q1 2022, is going to be big. And as you guys do know, people that make YouTube videos do make some money. Rest assured, it's not my biggest source of income, and who even cares, what it is. You shouldn't be worried about that, right? But I will tell you, and I will be transparent to tell you that, one, if you watch the live streams, I talked about this, I believe, last night. If, you see people making more videos now, I've noticed this in bigger creators making more videos on a daily basis than they were before. It's because advertisers have substantially reduced the amount of money they're advertising on YouTube and abroad. So basically, even me and other people are going to be making less in January and probably for the next couple of months until companies realize, hey, we have to start advertising more to bring in more customers to keep our revenue numbers going up. So that's another sign, which advertisers do slow down in January, but not to this extent. I've been in marketing for a long time now, and I've never seen a drop in basically CPMs. That's the way that advertising revenue is calculated. I've never seen a drop like this in January for a long time. So that's basically the scoop on all of that. Gonna be very exciting when you're thinking about the MOAS, because all of the greatest short squeezes happened when liquidity was somewhat restricted. Now, as far as the data for the day, this is intraday data. We're talking, it is almost 2 p.m. right now. You're looking at 19.33% short interest of free float, 99.25 million shares that are sold short, with a share utilization of 75.34%, and the days to cover at 1.47. Not too much has actually changed. Still a ticking time bomb, and still very hard for shorts to cover on their short positions. But what I will tell you is that I noticed the cost to borrow max has went up about 0.5% over the past day or two. So to see this moving in the upward direction is definitely a good thing. And I think the real cost to borrow, the average cost to borrow is more along the lines of the cost to borrow max. 2% to borrow AMC stock sounds very reasonable when this thing can move up or down 10 to 20% on any given day on very short notice, sometimes no notice. Going from 1% positive to 20% positive December 17th, I think you'd want to have a higher cost to borrow than 2%. So I think that interest rate is actually eating away at these liquidity levels of the hedge funds that are short at a faster rate than what the Ortex numbers do tell us. So that is the scoop on that. As far as the max pain, as you guys probably do know, it's about $23 by the end of the day today. So just watch that. It would suggest we'd see a big ass bounce, but I don't necessarily think that is going to happen. As far as the max pain for that big expiration, which is January 21st, that's looking at sitting at $23 per share as well. As far as the Stonk tracker data, like we went over in the last video, we are seeing just an outrageous amount of calls for January 21st. And the good news is, if you guys have heard this, or haven't heard this, it's going to be news to you, but the Fed meeting is the next big catalyst. That is January 26th and the 27th. That is going to be Tuesday and Wednesday of next week. Well, not next week, the week after that. Next week, January 21st, is Friday. So we're going to have that whole next week of basically just earnings that are coming out. Not any big catalyst. And the markets will get fearful around the Fed meeting. But considering this is the end of the week for January 21st is Friday, we should be in the clear as far as peak fear before the Fed meeting is concerned. Expect that the week after next week. So hopefully that makes some sense to you guys. But about 657,000 calls that are out of the money and 61,000 calls that are currently in the money, 150,000 in the money puts and 244,000 out of the money puts. So you're seeing this option chain just starting to populate like crazy. And it wouldn't surprise me if the out of the money call side is close to 700,000 by the time we do come down to January 21st, which very, very exciting. So that is basically the scoop of what you guys need to know. Some other events that are going on in China, like they're not reporting the debt, a lot of things that are not so good. The Chinese currency has been strengthening. That is a sign of bad things are coming. So if you guys want a video on that, let me know. That's more of a macro thing, and that's more of a global situation that is going on. If you guys want a video on that, let me know down below in the comment section. But that is going to wrap up this video. If you guys found value out of it, hit the like button for me, consider subscribing to the channel, and let me know what you think about this down below in the comment section. Give me your opinions, and I hope most of you guys are still here, because if you see me not respond to as many comments in the comment section, it's because I like to answer all questions on the live stream in between 10 and 11 p.m. Monday through Friday. So make sure you guys are a part of that. You do not want to miss out. Ask me questions for a whole hour if you guys want to. I answer them all. So I'll see you guys on there later on tonight. If you guys want access to all my trades in real time as well, check that link out that is in the pinned comment. Love and appreciate you guys. Thank you for watching. I will see you in the next one.